Welcome to the Caribbean Property Investing Podcast, where we share real-life experiences for successful Caribbean property entrepreneurs. Learn about their successes, challenges, and strategies to help you create your plan for financial freedom. Now let's get started.
I love my community. It teaches you the importance of being together even through difficult times. Business owners doing their best to make it through. Fishermen and farmers working hard to put food on our tables. Nurses caring for the sick shows me who we are made of. People who care. I guess it's about growing together.
To ruminate, to create your ultimate living space. And at Courts, you'll find what you need. Choose from our wide range of furniture, electronics, and accessories to complete your space. We're here and ready to assist. Give us a call to place your order. Shop online at shopcourts.com or visit us in store. So ruminate at Courts, bringing value home.
Welcome to episode 24 of the Caribbean Property Investing Podcast. We want to thank you for such great feedback on episode 23, where we had a conversation with Kieran LeConte, who is the CEO of Timeless Contractor Services of Timeless Construction. His story is an inspirational one, and anyone who has not viewed episode 23, please make sure you go and have a look at it, because it really is a story that speaks to resilience and perseverance. Having said that, I have a very, very special guest for our audience today. Someone who I've been trying to get on the podcast for quite some time, and my prayers have been answered finally. Today, we are privileged to have investment banker and also the host of the financial literacy blog at just.ask Anna, just ask Anna, Miss Ana-Kaye Greene. Ana-Kaye, welcome to the podcast finally.
Hello, Ansel. Thank you so much for having me.
Why don't you tell the audience a little bit about yourself?
My name is Ana-Kaye Greene. I am an investment banker. I am a Jamaican transplant who is living here in St. Lucia. I've been living here for the past 4 years. As I said, I'm an investment banker. My daily profession is managing the investment portfolio of an international bank. And on the side, I also have a financial literacy page where I share my knowledge of investments with persons in the region in hopes of improving people's financial literacy. And through that, I'm hoping that it will allow more persons to take charge of their financial futures and create their own investment portfolios as well.
Okay, I actually came across Ana-Kaye's blog some time ago, and I really like it. It's short, unlike our podcast, which is a little more of a long form. It's punchy. It has short nuggets and bite-sized pieces of valuable information that actually got me interested, and I actually follow it. And today we're going to kind of compare or discuss different types of investments and investing. And so because Anna is an investment banker, I want to start off with the traditional non-real estate investment forms that people would typically put their money in. First of all, why don't we tell people what is investing? I know we talk about preparing for the future, but in terms of investing in these instruments, just give us a summary of the instruments and why would people typically invest in those. I'm actually afraid of some of them. I know it's because of a lack of knowledge, but I've been watching your blog, and I'm interested in the ETFs. So hopefully we can talk about it a little more. So tell us about different forms of those instruments.
All right, great, no problem. All right, so investing in general is definitely using your money to make money for you in a broad sense. And in a broad sense, investing can be in anything that you think will generate you with more money, which includes, of course, real estate, investments in businesses, but the more financial type of investments, which is what I do, is investing broadly in equity and fixed income type investments. Those are very, very broad headings. You have other more complicated types of investments outside of those headings, but I will differ on those right now. So when we talk about fixed income, as the name suggests, it means that you are getting a fixed amount of return on your money. So these types of investments would include anything like fixed deposits at a bank, or if you were to buy a credit or a corporate note that an institution used to raise money, or if you go as far as buying government paper, government bonds. So the premise of fixed income is more like a loan from the investor to the person who is seeking to raise funds, with a promise that the money that you lend them, you will get it back within a specified period of time, and you will earn a specific interest rate that will be paid at set intervals, which may be quarterly, annually, along those lines. And then you have equity investments, which means that you are essentially purchasing part ownership of an existing business or a new business. And so the business is split up into very small parts, which is what you call equity or shares. And then by purchasing one of these shares, you have rights like the owner of a business, but it is in the same proportion as the number of shares that you own. And the objective of buying shares is that when the company earns profits, that you should benefit from some of the profits. And also when the company's value goes up because of how great the company performs, that the value of your shares should also rise. So that is it in a very basic form.
So I can hear some of the audience saying, what is she talking about? I don't have money. I'm not even able to save money. You tell me about investing. Where I get the money to invest, Anna?
Well, firstly, that is one of the things that people always say, and that's one of the reasons that I started my page, actually, because we think investing is only for the rich, but the barriers to investing, especially in the Caribbean, is much lower than we would think. So, for example, buying government paper, buying a government paper from the Bank of St. Lucia, the minimum start is, I think, 5,000 EC. And then prior to that, you have several other types of investment vehicles or fixed savings kind of vehicles that can allow you to save the money until you're able to buy the actual asset. And in buying stocks, the stock exchanges regionally have very low starting amounts. So you actually can invest without being a millionaire.
And government paper, that's bonds. How available or easily accessible are bonds for a typical employee?
It is not hard to get, actually. It's just a matter of you asking for it. And I'm speaking from knowledge of the St. Lucian market and actually the Jamaican market, because I used to practice investment management in Jamaica as well. You have to essentially approach a broker who is licensed by the government to issue their bonds on their behalf. And then you place an order with them to purchase these bonds. Most institutions will tell you what's the minimum amount they are willing to accept from you to go towards these investments, but it's really not difficult. It's just about knowing where to go.
And that would typically be a bank in most instances.
Yes,
Going to a bank.
banks or brokers. So here in St. Lucia, you can go to Bank of St. Lucia, you can go to First Citizens Investments. So it's a mix of both banks and brokers.
I was just thinking, typically in St. Lucia, when we talk about investing in stocks, investing in shares, I think over my career, before the rise of E-Trade, Ameritrade, and Robinhood, we probably would buy stocks and shares in Bank of St. Lucia or First National Bank, those kind of large institutional companies. Do you see an increase in the emergence of exactly what the sites I spoke of, E-Trade, Ameritrade, from normal typical solutions, now that they can just go online and create an account?
Well, based on my limited interaction on that topic, anecdotally, I'd say I would say no. I don't hear of many persons actively investing on those platforms, but there are persons who are doing it. So I wouldn't say it is a very popular thing, but it's definitely here. And people are becoming more and more aware of what is available to them. And through my page, I do get a lot of messages from locals who are following all of the new trends. They are very interested in what's happening internationally and the opportunities that are available to them. And not only here, but also my Jamaican followers as well are also paying attention. I wouldn't say that it is the majority, but the interest is definitely there. It can happen. There are a couple of hindrances to doing it, such as the cost of sending funds to these platforms, or in some situations, the fact that some banks are not do not process those kind of transfers. So those are some of the stumbling blocks that regional players would face. The interest is there, but it's not yet that popular.
I know of, it's called, I think, fiduciary responsibilities and liabilities. So one institution may not necessarily make recommendations on which stock to buy or where person should invest. But overall, in terms of how the market is in St. Lucia, from your knowledge, do we have more people investing in government paper bonds rather than stock, from your knowledge?
Definitely, definitely. That would be the default, or some kind of fixed income savings plan. So you have different institutions that offer fixed rates for a certain period of time. You get benefits for holding certain period of time. A lot of persons too like the housing funds, because that's something that a lot of persons are interested in. But I just want to put a caveat out there, and so even though I do investment banking in St. Lucia, I mostly manage the bank's portfolio and not so much of individuals' investment portfolio.
Right.
But based on
So the
the
banks
discussions that
own
I've had,
investment.
most persons who talk to me about investing here are looking at some kind of special savings account that will lock their funds for a year or 30 days or 90 days and get a special interest rate. And there's another institution here that kind of forces you to save by having penalties if you break early and that kind of thing.
So let's talk about those. What kind of rate can I expect if I were to buy any of the current available bonds? What kind of rate am I expecting, and what's my typical minimum period? Is it 3 months to a year, and am I getting more than 2%?
You're definitely getting more than 2% if you purchase government paper. So the amount of interest that you get depends on how long you hold your investments for. So government of St. Lucia, shorter dated treasuries, those are about 90 days, and then you can go up to a year or more depending on what is available at the time, and also depending on who they are targeting with those investments. Because it is fair to see that some issues will be targeted to institutions versus individuals. So I expect that the individuals would be more involved in the shorter dated treasuries. And in the St. Lucia treasury market, the interest rates can range from 3 to 5%, depending on how long you hold your investment for.
Which brings me to a nice segue where you can actually ask me questions. So my typical real estate investment of a long-term apartment rental is about 7% a year gross. And we're looking at maybe $3,000 a month, $36,000 a year, for a $500,000 investment. That's if I do long term, 7%. If I do short term, I probably will double that to 14%. That's gross. Taking out some
Right.
of my maintenance. If it's a new building, I have very little maintenance, but paying gardening and so on, I'm still netting short term 12%, 12,
Right.
12%, 11%, and
Yeah.
long term maybe 6%. I do recognize though that the barrier to entry is a lot higher, whereas
Right.
I could do $5,000 for a government bond or $10,000, but I need $500,000
I'm
for
wondering too,
for
right.
a building or an apartment. But
Yeah.
for people like me who are partial, and I recognize that it is a flaw, I don't recommend it. I think that people should have. You always hear about a more diversified portfolio. It's true. You should have your
Right.
investment in other areas other than real estate. But for me, I invest in real estate because I think probably because I invested in other things before and it didn't pan out, other businesses. And so maybe I felt, you know what? I felt, I can see it, I can feel it, I can touch it. I can look for good tenants, I can manage my construction costs, so it feels a little safer. Um, so for me, the benefits of real estate, one, I can do short term or long term. I also have my capital appreciation, capital gain. So over 2 year, 3 year period, definitely I will see anywhere between 10 and 15% appreciation on the valuation of
Yeah.
my buildings or my units. Um, Also, I have options. I believe in investing in multifamily. I believe in having at least 2 units where I can sell one back to cover some of my mortgage and have a better chance of cash flowing. So that is how I would hedge against the risks of not having rentals or high vacancies and having to pay back a mortgage with an empty apartment. So I believe in building, selling some, and holding some. So that's why I invest in real estate. Um, what about you? What about you in terms of investing? Are you diversified? Are you looking at getting something soon to make sure that you have stocks and brick and mortar?
So, all right. So there is a healthy debate about whether financial investments or tangible investments, which one is better. And I would say there are benefits to both because you are saying you will make 7% a year on investing in your real
Gross.
estate portfolio, gross, right? But at the same time, for the person who doesn't yet have the $500,000, financial investments can provide them with an opportunity to get to the point where they can then invest in something that they can see and feel. And my personal opinion is that real estate is um, an excellent complement to having an investment portfolio. I don't believe that it is either or, but they work very well together. For me personally, before I go on to that, in the stock market, over the last 5 years, the US stock market returned over 100%. So that means that on average, they would have been earning 20% per year on their stocks, right? The Jamaican stock market in I think it was 2019, 2018 alone, earned 57%. But then you have this situation where in March of last year, all of the stock markets plummeted, and that's when Corona stepped on the scene. And then on the other hand, you would have seen where the real estate market in the US boomed in 2020 because of the same Corona. So what that says to me is that you benefit from having your eggs in multiple baskets. For me, I work in investments. I do investments. So I think that it is better for me to have something in addition to just financial investments. So because of that, I do have my own real estate investments, tangible real estate investments. And there are benefits, I think, to having both. As I said, through my investments, through buying stock and holding stock, through saving in fixed deposit accounts, that's how we are able to come up with your deposit so that you can get a mortgage, and Then on the other side, when in March the stock market fell, I was very happy to say, all right, well, at least I still have this on this side that is still performing well. So it's a great addition to any investment portfolio.
So I can't help but think, okay, knowing the financial investment landscape, um, how did that benefit you? How did that prepare you? How did that arm you as a benefit when looking for a brick and mortar investment compared to somebody like me who does not have any paper investments or instruments?
Yeah.
How did
Well,
that
I
help
think
you?
one of the things is that it made me take a very technical approach to purchasing property. I wasn't looking at it from a feelings perspective. It wasn't about, oh, I really want this home and, it's about me. It really wasn't about me and my personal preferences. I looked at it financially. I said, all right, this area, I looked at how much rent can I get in this area versus how much it will cost to buy in this area. What is the appreciation of the properties like in this area? And is this an Airbnb area or a long-term home, and also looking holistically at investing in property, looking at things like strata fees, maintenance fees, some of which you learn along the way because some of it you learn along the way, but upfront it was a very mathematical calculation about in income versus expense. When do I expect to start actually breaking even, or so it was a very formulaic kind of returns based decision as opposed to a home for me. I've actually never lived in in my house.
No. I'm actually thinking a lot about that approach. I think it's important because I'm always cognizant of our audience and people saying, well, you have some benefit or you have a big job or why people can go into real estate investing. But what I always recommend, the starting point, and I say this all the time, everyone needs somewhere to live. So
Right.
unlike you who may be living out of your home country, if you're in your home country, what I'm saying is that instead of giving, you know, um, a landlord money for 10 years, plan for it.
Yeah.
Plan, over
Right.
3 years. As you said, go invest in some stock. Maybe you can make some deposits some way. I actually know a lot of people who invest in penny stock, who invest actually in Tesla, who invest in
Right.
the big blue chip companies like Apple. Of course, they can't buy a lot, but
Yeah.
there has been such great movement over the last 3, 4, 5 years. They're able to come out with
Right.
100%, 150% of their investment. And they've used that
And
to get a deposit, to look for a piece of land, to do something. So my recommendation, I think it's important to say this at this point in time, that my origin or origination into real estate investing comes from your need to somewhere to live. That's what I'm saying. Instead of just building a
so let,
house,
let, let me add something. One, I mean, a car is not an investment, right? I don't consider a car an investment unless you are doing a taxi service or something like that. But I will say that when I just left school, when you just leave school, you don't have any money. You're just starting out. It was because I started investing right away. I studied finance, decided to apply it to my real life. So I started out investing in this product actually called, it was a Sigma fund at Sagicor Investments. A long time ago. I think they still have those funds, but it was by just investing a little bit of money each month that I was able to come together to get my deposit to start to get a loan to buy the car. Is this anything that I'm doing is usually over a period of time, saving a little by little to be able to get the deposit to start. I've never had the luxury of just having the cash to be able to do what I wanted to do. With regard to being fortunate to not live in the place, I'd refer to one of my friends. I have a friend who he bought a house and he was fortunate to live with his parents. So he just stayed at home, bought his house, and then rented his house so that he could actually afford the mortgage. And until he was able to, move to make more money to be able to actually move out. So there are also people who will rent their house for a higher rent than the rent that they are paying. So if they are able to pay a lower mortgage, lower rent, a very low rent, so they don't live in a nice place, they live where they can afford, they rent their place higher, the rent, pay the mortgage, and then they're able to offset their mortgage that way. And that is in a situation where the multifamily might not be so available to them. Because here, most people build. You are able to buy land and build a property. In the Jamaican markets, apartments are just popping up here and there and might be what you can afford, or you can buy a house in a housing scheme. We have a lot of housing schemes and housing developments, and most of those are not multifamily. Most of those would just be single family units. So it would be a tough decision for you. So if you live there, you definitely can't earn, and that might be where they are able to access it. So it takes a tough decision for you to say, all right, I'm gonna forego my comfort, stay at home, allow somebody to pay the mortgage for me until I can actually afford the mortgage on my own, or until I can afford to get something else.
I think that the difference in the way we live and work in the islands sometimes can be so stark. That's a very good
Yeah,
point that you made about
yeah,
how infrequent it is to, especially in urban Jamaica or urban Kingston, to
yeah,
buy a piece of land and build a house. I lived in Jamaica for 4 years, and I never recall seeing a house on pillars. And for islands like
no,
Barbados, maybe
yeah,
Grenada, St. Vincent, Dominica, Antigua, that's what I recommend. For
yeah,
your first mortgage, build it on pillars, and then put
yeah,
an apartment downstairs, and you go from there.
yeah,
I've never seen that in Jamaica. Maybe
yeah.
somewhere in St. Catherine or Clarendon or
Maybe in
Manchester.
a more
I've never seen it.
rural place, but we usually build the bottom layer first and then build on top. We don't build the top and then fill it in.
Do you have any idea why? Now that you live in both countries, you have any idea why Jamaicans do it that way?
I think it's a matter of having never. When I came here, I found it really surprising. I was wondering why are all of the why are all of the houses up in the air? I think it's just the way that we're used to. And the thing is, it's the same concept. You build the bottom floor and then you build up. But it's just what we're used to. You build a foundation deep enough to be able to accommodate another story. But we usually just don't build on pillars. I don't know.
So I think it's important now to speak about it. Just looking at as a pure investment vehicle. Real estate, we have different forms. So as we said, the most common one in St. Lucia is you build on pillars, and then you put an apartment over
Yeah,
time, 2 years, 3 years. You cast the floor, you put the walls, and you get some rental from the contribution towards your mortgage. For me,
right.
I didn't want to carry a mortgage. I wish I could sell everything and then do it all over again. Of
Yeah,
course, we can buy pure land, as we said, that you can start up that way. Buy pure land, cut it in two. I have a good friend in the Bahamas, and he tells me, Until all I do is one deal per year. So he normally buys like 30,000 square feet, cut it up and
hmm,
sell it. Just on the outskirts of a developing area, which probably will come into uh, uh, I guess, more prominent maybe in 3 to 5 years. Some of us don't have that patience because we want it now, but you can do that. Even if you buy 10,000, cut it into 5,000 lots, or 13,000, under 20,000, you can do that. You can also do a renovation. And in other podcasts, I've spoken about it. The surprises are too scary for me to do a renovation. But after
yeah,
after hearing Thomas Leos and the MD from Bank of St. Lucia speak about their renovations, and Karen Fontenelle speak of their renovations, I realized that the renovation actually has a big benefit, which I did not know until I did those interviews. And that is
yeah,
the renovation. That's what I think. I call it the emotional factor. when you typically do a building from scratch, the inputs, price of the land, price of the material, you get a price evaluation. But when you buy a building that is maybe 10, 15 years old and you renovate it, somehow what I found is that the price that you get for the building, because maybe you don't know what the cost was back then, the price you get for the finished product, I always find is inflated. So you can get some additional equity and a higher value than if you would have just put the inputs alone. So that was one benefit.
Oh,
And it's also a faster appreciation. It appreciates when to finish it. If your renovation was 3 months, at the end of 3 months, you get the appreciation that you'd have taken years to get if you're to build on your
yeah.
own. So that's new benefits that I learned from the renovation. And of course,
Well,
you
oh,
can do just pure flipping, not like in American flipping where you just buy kind of a drywall place and in tutus,
yes,
like all those shows on HGTV. You put some nice
yes.
tiles, nice painting in 30 days and
Yes,
you
and I
make.
remember one of your previous guests was explaining to us how you actually don't fully buy the house. You buy it kind of in a limbo. I don't remember his exact term, but you just buy it and sell it back before you even have to actually shell money out to pay for the property.
I have a good friend who there's a property I'm interested in the north, and a good friend of mine bought a piece of land from an intermediary. The intermediary did not even pay the owner for the land, signed a contract
Yeah,
and resold that lot to my buddy.
right.
And my buddy paid him. He collected about $67,000 and paid the owner that price. Easy money like that. Never
Wow.
owned it. But that's not
Wow.
that's very sophisticated. You see that in the US a lot.
Yeah,
Most Caribbean people and St. Lucians, you don't have the wherewithal
not
or the
doing.
experience to do that because you have to have financial backing to do that.
Yeah, but that is so as you said, financial backing, and that is where that's one of the biggest contrasts between investing in real estate and investing in financial assets. Um, when you own financial assets, the cash flow is usually out one time. You just buy it, and then after that, everything else is just either interest coming in or dividends coming in, and then eventually you will sell it and you get cash flow that way. Whereas when you buy real estate, there is a consistent need for you to continue to invest in these properties. So you have to maintain, you have to change things, you have to fix things, and you don't even realize, even if it is a new place, because sometimes depending on where you are, developers give you, depending on where you are. In Jamaica, in the Jamaican context right now, you have a lot of development happening, a lot of apartments, and so you get kind of factory grade finishes and so on. You may have to fix things right after it is finished being developed, so that you can maybe personalize it, add some touches to increase your rental value, or over time when you're renting, you have to fix things, tenants break things, stuff like that. So even though you can get financing upfront for real estate, there's still money that you have to find unexpectedly to keep putting into these properties. Whereas when you in your investment portfolio, and the good thing too is that if you have an investment portfolio complementing your real estate portfolio, you sell some shares and fix the water heater. You sell some shares and repaint the property, because you would have been building up this maintenance fund to support your real estate portfolio as well. So they really do work in tandem. And if you know that you don't have the wherewithal, either monetarily, or you don't have the energy and all of that is necessary to maintain and keep building or developing or supervising these projects, then you also have real estate investment trusts, where professionals like you, Ansel, who have all the expertise in building these properties, we financial people say, hey, I know when Ansel builds something, it's going to be great. So we're going to invest in your trust. So you do the real estate investment, you do the heavy lifting, and then the investors benefit from real estate and your expertise as well. So that's another way,
Now,
another thing that we can look at.
Now you're right there. Audience, I put up my hands. She's right about that when she speaks about the need to continuously spend money on your properties. 100% right. 100% right. No debate there. I guess I see it as a necessity. It's like
Yeah.
maintaining the building, making it look good, so you can actually raise your rent if you want to. I
Yes.
mean, I haven't raised my rent in like 4 years, but
Yeah.
unlike the US, I think they raise the rent every year in the US.
Yeah.
But you can raise your rent to offset that. When you spoke about complementary in investing in instruments that are complementary to real estate, you know what I thought you were going? I thought you were going to talk about like I'd buy shares in the paint company, I'd buy shares in the
Well,
construction company, I'd buy
that's a good
shares
idea as
in the
well.
water heater
But
company.
that's a good idea as well. But it also, so in managing your portfolio, if you were to own real estate and then buy real estate associated stocks, you would find that it's not wrong, but it may not be risk mitigating. Because, for example, if
Agreed.
there were a drop in demand for housing, then you would have less paint companies selling paint. And then if there's a drop in demand for housing, that means that the house that you're also trying to sell would depreciate in value. So you wouldn't have it being offset right there. If it's a situation where you have a drop in demand for housing, so you're not able to sell your house right now, but at the same time you had bought tech stocks where people are buying that, it would help you to balance the losses on one side with the gains on the other side.
I think that's great advice. I think that's great advice. Let's
Yeah.
let's talk briefly about the real estate investment trust. And I got interested in it when I read about the Carlton Savannah REIT by Proven Wealth and Kingston Property REIT in Jamaica. When I found out once you have a number of units, you form a company and people can actually invest in that company. And as you grow, rent, sell, you can give dividends to persons who are shareholders. I like that idea. But there's one little riddle for us in the Eastern Caribbean, Ana-Kaye, and that is collective investing is the one exclusion. Actually, real estate is the one exclusion in the collective investing scheme of the ECCB. I've had a meeting with them 2 years ago. I think I wrote a letter, and that's something that they said that they would look into. I think it was since 1991. So I don't know, when that will change.
Well,
I'm looking forward to that changing.
how I see that it is being done, because real estate companies are really one of the areas in investments that is really, really growing. You can see that Corona, the pandemic, even though it's been devastating in many ways, the real estate market is one market that really benefited from it. Houses are increasing, work from home is causing more and more persons to take more pride or invest more in where they live. And even in the Caribbean, remember when there were shutdowns last year, Barbados was one of the forerunners in allowing visitors to stay for extended periods of time working from home in Barbados. All right. So what I was saying, I've seen more real estate type of in companies coming up, and what they do is the company itself owns the properties and then they just sell shares in the company. Is that the same? That's the same legislation you were just speaking about?
No, it's slightly different. I think it's for listing on the stock exchange. It's for listing on the
Oh,
stock exchange. Uh,
it cannot be
yeah,
listed.
right now in the Eastern Caribbean. Yeah, as far as
Yeah.
I understand it, there are no real estate listings on the Eastern Caribbean Stock Exchange. But I think that's something that we have to look at. Now, I guess as we wind down, um, for persons like myself who know about stocks, know about bonds, I always think of how much do I have to pay when I have to cash out. Okay, so I have my little $1,000 or $5,000. I invest it, and I have to give you how much? 5%, 1%, 2%. What are the
No,
fees associated?
well, fees depend on how much service you need. So if you were to get a portfolio manager who manages everything for you, makes all the decisions for you, that is where you would kind of see hefty fees. If you purchase a bond, usually there isn't any fee for just purchasing the bond. Yeah, there is usually not a fee for purchasing the bond because the issuers of the bonds are who usually pays a commission to the persons assisting them with raising money. So if you have a corporate bond and a company is helping helping company A to raise money, at the end of the raising of the funds, company A would then pay the brokers for their assistance, and the bondholder, wouldn't be paying a fee because the only thing that you'd be liable for is your taxes, depending on what the rules are where you are. If you purchase stocks, usually there are fees associated with each stock exchange, and then there would be a trading fee, which can be up to about 2% in all, 2 to 3%, depending on how you do it. Currently in Jamaica, you can trade directly on the Jamaica Stock Exchange using a JTrader account, and that reduces your fees a lot. You kind of reduce your broker fees. You just go in, put in your order yourself, and you buy your stocks. And so you just pay the stock exchange fees. So it's really not a lot of fees. It depends on what you're doing. If you're buying ETFs, though, like exchange traded funds, those funds usually have fees built in, and those fees can range anywhere from like 0.15% up to about 1%. So when choosing the fund, you look in and see if this makes sense. And usually you have an expensive version and a cheaper version, depending on how many persons are invested in the fund. So if a fund is very, very popular, has a huge amount of money under management, you might find that you have a lower fee that you need to pay because they're making money from the volume of money that they manage. So unless you are invested in a specific product that charges you fees for that product, then the fees can be very, very minimal. Some other times too, it may be worth it to pay the fees. So like when I did the first investment that I did, as I mentioned before, which was the Sigma Fund by Sagicor. At that time, I was, pretty fresh, had book knowledge, but not necessarily market knowledge. So it was to my benefit to invest in that fund and allow them to do the investment for me. So in that situation, you look at the net return. If the net return is still good, and that means net of fees after the fees are deducted, if that return is still good or better than what you're getting before, then it would still be a good investment.
So I have two questions. You decide which one you want first. I always like to end on a good note, though. So maybe I should ask
Okay.
this one first. For persons like my mother and a lot of people who are retirement now or newly retired, they would have
Yeah,
invested in some regional companies, regional insurance
yeah,
companies, whether they are annuities or stocks, and they would have lost hundreds of thousands of dollars. I know two people in particular,
yeah,
net losses of more than $100,000 each, and that's the pension.
yeah.
What advice you have for persons looking at this podcast and listening and knowing of their parents' experience? What advice you have in terms of helping them to start off and what to be aware of, what to stay away from, and what do they need to know about starting uh, financial instruments investing?
Okay. So one thing I will say is that I feel that the financial landscape or the prudence in the financial markets in the Caribbean has gradually improved and gradually become more and more stringent. Even with the financial standards that we use, there are more and more um, regulations that are in place to basically protect the shareholders or the investors themselves. One of the key things that I would say as a piece of advice is to try to understand what you're investing in before investing in it. And that might sound difficult, but if you have a company A offering you something that they are that's their own product, then I suggest getting a second opinion. Getting a second opinion from maybe a competitor, getting a second opinion from an independent party that can assist you in seeing the things that you may not be able to see up front. I don't believe that everybody should have all of the expertise or needs to have all of the expertise in investing, but use the resources that are available in order to paint a clearer picture for you. I'd say read a lot of like pay attention to the reports, the results that are available in order to help you to make a better investment decision. And I also believe that we should invest in things that we understand. So if investment is too complicated that the issuer is unable to explain it clearly for you, then that might be a red flag for you. That might be something that you're not comfortable investing in it because you don't understand how they make money or how these things will turn out into making money for you. And I'd say meet with financial advisors, ask multiple people for feedback and reports on new investment instruments. The financial markets, you have a lot more experts that are available now from different brokers across the region. And so I think that it is easier to see analysis on a consistent basis on these instruments. If you were to buy stock on any stock exchange within the region, there are definitely brokers who have done reports on them, done the analysis, reviewed their financials thoroughly to be able to give you a more neutral, balanced investment recommendation on these things. So the top recommendation is to get different persons to give you recommendations on one thing. Don't only listen to one person. Read, invest in things that you understand. Yeah, that's what I think.
And of course, if you want to get good advice, go to the Just Ask Anna blog
So
on
just
IG.
ask them.
So okay, so my young professional watching our podcast, like me, so
Yeah,
I've now recognized that I need to invest in some white paper, but I'm risk averse even though I do property.
yeah,
So I'm more inclined to do a bond, and I definitely want to
yeah.
know which island in the Caribbean has one, the lowest entry requirement, the highest rate of return, guaranteed rate of return and flexibility, and the best reputation of
For
bonds not being
repayment.
extended and they being repaid on time. So I am interested in those. I'm not asking you to tell me that
Well,
right now, but
yeah.
that's where
But
I'm
well
thinking now.
said it. I'll
What?
just say this broadly. I would need to, do more research and I'll definitely share that with you. But one thing to pay attention to is the EC dollar versus say the Jamaican dollar versus the TT dollar. EC interest rates will be lower than the Jamaican dollar interest rates or the TT interest rates because the EC is a stronger currency. So you have to pay attention to that as well. And you have to pay attention to the fact that if you're invested in, say, Jamaica, it's because you might get a higher interest rate if you use Jamaican dollars or even US dollars because there's more foreign currency risk there. So yeah, so just looking at the interest rate alone may not give you the full picture, especially since you said you are risk averse, right?
I think I would not invest in a government with a currency that slides every day. To me, that's a given. So I already knew that. Um,
Yeah,
but tell us simply, a young professional watching this, if they were to start with why people invest in financial instruments, what are some of
yeah.
the maybe top three things they could do, and how could they start?
All right, so the first thing to do is save. That's the first step. You can't invest if you don't have any money to invest, right? So I'd say the first thing to do is save until you meet the minimum requirement for what you want to do. Next up, if you want to purchase stocks or even bonds, find out what is the minimum amount that's available, that is needed in the institution that you are. In Jamaica, if you want to buy a Jamaican treasury bill, I think that it's Jamaican, well, back when I was in Jamaica, I don't know if this has changed, but it was about 5,000 Jamaican dollars, which in EC, that's like not much. That's like, I guess $100 EC. If you want to buy stocks on the Jamaica Stock Exchange, and you have US stocks on the Jamaica Stock Exchange, the minimum number of shares that you need to buy is 100 shares. If you were to buy a US share at 20 cents a share, that's what, 100 times 20 cents, $20. So nothing really, it's not too prohibitive, but you have to understand the return that you make depends on the amount of money that you invest. I mean, $100, 100% of investing $100 will just be $200. So you can't. So it depends on the amount that you invest. Does have a direct influence on the magnitude of return that you can come to expect. But I think through being aware of what it is going on RGSM, seeing what is available on any given day, and where you can get it, that will open a door in itself. It is not as prohibitive as we may think.
For the benefit of our audience, what's RGSM?
Oh, sorry. It's the Regional Government Securities Market, RGSM, right? So that is this exchange within the Eastern Caribbean region where all of the governments, not the exchange, the platform, where they announce what securities are available on any given day when it is coming up, what the terms are. So that would be what kind of interest rate it's going to pay, what kind of tenure they will hold the money for. All of that information will be available on that website. And if you talk to your brokers, they will tell you as well.
I mean, Ana-Kaye, you have me thinking so much, of how exposed I am, in being so close-minded to, financial instruments. So I'm ending with my silver bullet, leverage. So you tell us how, the benefit of the stocks and bonds is that you put one set of money up and you leave it alone. Whereas with our real estate, we have to keep on painting the building, fixing this, renovating that.
Yeah.
But
Listening to
leverage,
tenants.
I need to come up
Yeah.
with, I need 100 grand. Some
Yeah.
companies, most financial institutions give you 80% if you come up with 20% or maybe more. So
Right.
Ana-Kaye, with $20,000, I save $20,000, I can get $100,000 to build my building. What do you say
Right.
to that when we're comparing two stocks?
Well, you actually have leverage in stocks as well. I just didn't mention it before. So you can buy stocks on leverage. You can buy stocks on margin. There are ways where you can pay like 10% of the value of the security, and then you get a margin from a company. So for example, if you buy a stock and the stock is you're earning say 8% a year on the stock, you borrow 2% from the bank, you're still earning a multiple of the 8% because you got leverage in order to purchase the stock. And you have another situation where you can purchase options. So options are the ability to do something. So say you think that a stock is going to rise and you know that the stock is going to rise to $100. You buy an option to buy the stock at $10 so that should the stock rise to $100, you can buy that stock at $10 that day and just sell it and make how much? 10 times again. And so based on that, that's a way of investing only a fraction of the price of the actual stock and then benefit from the run up in price. So
That's what they call
we have that
the
too.
margin call, right? That's what they call the margin
Right,
call.
right.
There's a good movie on that. Good movie on that, where you can actually bet against a stock. Bet
Yeah,
instead of typically investing for it to rise, you can actually bet that it will fail and make a lot of
yeah,
money.
yeah.
So before we go, Ana-Kaye, why don't you tell our audience how they can reach you, how they can find out more about you, where to send questions to you, how to get more
Okay.
information.
All right, so you can find me on Instagram at just.ask.anna. So it's at just.ask.anna. You can find me there. You can send me a DM, or you can use the contact feature there and you can get in touch with me. You can look at any of my videos to find out, the basics about entering the investment market and add to your own investment portfolio. And thank you so much, Anselm, for bringing me onto this show today. I have been watching since episode 1, and by watching your show, it has definitely expanded my knowledge into real estate investing, the building process, the building on stilts, and multifamily. And that is definitely something that I intend to incorporate into my investment portfolio as well. So thank you very much for having me on your program.
Wow. Okay. Well, thank you very much, Miss Ana-Kaye Greene. You've been listening, watching another riveting episode of Caribbean Property Investing. Financial instruments, can be complex, I think, if you don't, just like as anything else, if you don't get more information, go and get educated,
Right.
go and find out more information. For us in brick and mortar, property investing, I realize now that there are benefits for sure, especially as Anna told us, we can invest in stock or bonds to get us some profit, to do some renovation, to do to get deposits, and to do a little more, and all that is actually allowing us to better manage our risk by being in two different areas. As I always say, everyone needs somewhere to live. You should own yours, or try to own yours. Until next time, check us out on YouTube at CaribbeanPropertyInvesting.com, on Instagram, on Twitter, on Facebook. See you.
I love my community. It teaches you the importance of being together even through difficult times. Business owners doing their best to make it through. Fishermen and farmers working hard to put food on our tables. Nurses caring for the sick shows me who we are made of. People who care. I guess it's about growing together.
To ruminate, to create your ultimate living space. And at Courts, you'll find what you need. Choose from our wide range of furniture, electronics, and accessories to complete your space. We're here and ready to assist. Give us a call to place your order. Shop online at shopcourts.com or visit us in store. So ruminate at Courts, bringing value home.
Congratulations and thank you for tuning in to the Caribbean's first property investing podcast. We want to help Caribbean people create wealth and achieve financial freedom through property investing. Our show provides general advice based on personal experiences and is for educational purposes only. For more information, resources, and past episodes, visit us at CaribbeanPropertyInvesting.com. Remember to click the subscribe button so you never miss a show. Let's go.